Good morning, students. Today, I, Ankita, is going to start with your next chapter, that is chapter number 2, some basic concepts of macroeconomics. So, today we are going to start with the topic number 1 of your chapter 2, that is the classification of goods. Beforehand, you must know that what do we mean by goods? Goods are the basic materials or the commodities which satisfies the human wants. For example, you can say you want to buy a car and that car is what for you, that is a good for you. So we are going to classify the goods on the basis of different characteristics. So we can classify it as final goods, consumer, which are also known as consumption goods, capital goods and intermediate goods. Clear? The final and intermediate goods are interrelated and consumer and capital goods are interrelated. And how, this you will come to know in the further video. Now we will study each type of good in detail. The first one among the classification is the final goods. So firstly you must know the definition of the final goods. From the name itself it is clear that these are the goods which have crossed the boundary line of production and are ready for final use by their final users. Now you must wonder that what do you mean by this term, that is cross the boundary line of production. It means that the good has passed the process of production and also the process of value addition, that is there is no value to be added further in these goods. So let's take an example first of all, then you will get it more clear. Okay, let's take an example of a cell phone. As we know that a producer will produce the cell phone. Clear? And suppose he is selling a cell phone to wholesaler at rupees 10,000. Clear? Now what wholesaler will do? Wholesaler will add a certain value in this rupees 10,000 and will further sell it to the retailer. So suppose the wholesaler is selling to the retailer that cell phone at rupees 10,500. So how much value is being added over here? The value added by wholesaler at this stage is 10,500 minus 10,000, that is rupees 500. Now this rupees 500 has been added by the wholesaler in the price of that same cell phone. Now what will retailer do? Retailer will further sell it to the final consumer and he has also added some value in this value of the cell phone and he will sell the cell phone at rupees 11,000. Now how much value ultimately the final consumer has to pay for that cell phone? It is rupees 11,000. So we can say that a cell phone was a final good for the final consumer because the final consumer will not be able to add more value in this 11,000. So when a particular commodity passes the whole process of production and ultimately reaches the final consumer, that good is known as the final good. You can take any other example also. For example, the pen you are using right now, that pen is a final good for you because you will not add further value. Suppose the value of the pen is rupees 20. So you have purchased that pen for rupees 20. You will not further add the value in that pen. So that good is a final good for you. This whole process is called the process of production, and I hope that you all are clear with the concept of value addition also. Now the next term which must be clear to you is the final users. Now who are the final users? Basically, final users can be divided into two parts, that is the consumers and the producers. Now who are the consumers? Consumers are like us who used to consume various goods on daily basis for satisfying their wants. On the other hand, the producer wants the final goods for the further production activity. Therefore, we can classify the final goods on the basis of final consumer goods and final producer goods. Now what are the final consumer goods? These are the goods which are purchased and consumed by the final consumers for satisfying their wants. Clear? And what are the final producer goods? These are the goods these are the goods which are not consumed but purchased by the producers for the further process of production. For example, the tractors or combines which a farmer purchases, he purchases these tractors or combines for the further production of the crops. Similarly, any producer who purchases machinery for his factory, that will come under the final producer goods. So I hope you are also clear with the final goods and their classification. Now next comes is the expenditure on final goods. Now what do you mean by the expenditure? The money spent on the purchase of any commodity is known as the expenditure. Clear? Now expenditure on final goods can be classified into consumption expenditure and the investment expenditure. Now from the name itself it is clear that consumption expenditure means that the expenditure which is made by the final consumer on the purchase of the final consumer goods. Basically, it is done by the households. For example, we are purchasing any commodity. Clear? So the money which we are spending on the purchase of this commodity will come under the consumption expenditure. On the other hand, if we talk about the investment expenditure, it is the expenditure which is made by the producers on the purchase of final producer goods. Clear? And the example, as we have already read, tractors, combiners, machineries, etc., which is used in the further process of production. Now why it is called investment? It is called investment because if a producer is spending money on the purchase of any machinery, it will be investment for him because it will further give him profits in future by selling the commodities which are produced by those machinery. Clear? And you can also give the example of the final consumer goods, which may include wheat, sugar, butter. It may also include milk. You can take any example which you are consuming in your daily life. Now, if the question arises that how is expenditure calculated? Now, what will you do? For calculating the total expenditure on the final goods, we have to add consumption expenditure with the investment expenditure, because we know that this is the total expenditure being done in an economy, that is one by the consumers and another by the producers in the form of investment expenditure. Now I hope that you all must be clear with the characteristics of final goods. So we will discuss at once. The first characteristic or the feature of final goods is these are the goods which have crossed the boundary line of production, which means that they have passed out through each and every process of production and are ready for the use by the final users. Clear? Second point is value is not to be added to these goods. Why the value is not to be added? Because it ultimately reaches the final consumers and they do not add any kind of economic value to these goods. Clear? Next one is these goods are not used as raw material by the final users. As we know, these are the final goods, so these are not used as raw materials, or also you can say the inputs. These are not used as inputs by the final users. Clear? Next point is these goods are not sold during that accounting year. That means if I as a consumer has bought sugar for consuming in my house, would I resell that sugar further? No, I will not, because that is a final good for me and I have purchased for satisfying my wants. Clear? So the final goods are those which are not resold during that accounting year in which they have been purchased. Next characteristic is the expenditure, that is the total expenditure on final goods, is equal to C plus I. Now what is C? C refers to the consumption expenditure which is made by the final consumers on the purchase of consumer goods, and I refers to the investment expenditure which is made by the producers on the purchase of various producer goods. And the last point is it is included in the estimation of national income. We have done it earlier also that only the value of the final goods is considered in the estimation of national income. Clear? We will do this concept in detail in the further video. Clear? You can take other examples also in case of final goods like pens used by students. Like you are using the pen, that pen is a final good for you because you are not going to resell it and you are using it as you are not using it as raw material. Clear? Next is milk used by households. As we know, it is our necessity to drink milk daily, and that milk which is used by the households is a final good for those households. Clear? Because they are neither reselling that milk and are not using it as raw material. Now next example is purchase of air conditioner for use in a shop. Clear? Now suppose a shop is there and that shop is using air conditioner for its daily use. That will be a final good.